Okay, good morning and welcome back to the Arab Federation of Capital Markets annual conference here in Muscat. We hope you all had a great evening and are ready for another day of learning, networking, and discovering new opportunities. Yesterday, we heard from some of the most influential voices in the industry who shared their valuable insights and perspectives on the future of the capital market. We also had the opportunity to network and connect with one another, which we hope will pave the way for many fruitful collaborations. Today, we're excited to continue on the same path with a full lineup of expert speakers, insightful panel discussions, and much more. Our speakers today come from a broad range of industries and sectors, bringing their unique perspective and knowledge to the table. But before we get started, we would like to thank our sponsors, partners, speakers, and you all for making this conference possible. We hope you'll take full advantage of the opportunities presented to you today as we continue to work together to grow and strengthen the capital markets in the Arab region. But let's pick off where we left off yesterday with panel 6. As you can see, we have the panelists and moderator sitting before you. Beginning with John Gollifer, the General Manager at Middle East Investor Relations Association, who will be the moderator for the Integrating IR and ESG to Maximize Value Panel 6 discussion. Followed by Sheikh Khalifa Al Khalifa, the Chief Executive Officer at Bahrain Bourse, who is a panelist, as well as Yasmin Hameda, the Head of Investor Relations at Commercial International Bank Egypt, as well as Lamia Hariz, Head of Corporate Communications, Marketing and Investment Relation at Adib, Amar Imara, the Head of Investor Relations Business at GFM Mubashir, and last but not least, Sharif Khalil, Investor Relations and Corporate Communications Expert. Have a great discussion.
Good morning, and thank you very much for the kind introduction. That's sort of taken up half my notes already, so I'm excused in trying to pronounce difficult names, at least for me. First of all, on behalf of Mira, I'd like to take the opportunity to thank AFCM and of course MSX, our hosts. I think those who were at the dinner last night have done very well to return this morning, given what a wonderful day it was, and indeed a beautiful evening in an amazing venue. Just listening to the introduction from our MC, the word or the acronym ESG featured quite a bit in the discussions yesterday from a broad number of perspectives. And today we're going to be very much focusing on investor relations, so that key relationship between issuers and the market, primarily the investment community as far as IR officers are concerned. And when we talk about maximizing value and setting priorities, of course, that's essentially the first question that any reporting line would ask of our IR officers. I think it's fair to say that there is a growing regional mandate for reporting on sustainability, very much in response to the needs of our stakeholders, as I mentioned, not least the investment community. And I think the policymakers and the exchanges, clearly represented here today at AFCM, are clearly in the vanguard, leading the charge in terms of how we actually effect that reporting. It's also true to say, I believe, that internationally, you can see a convergence in terms of the existing frameworks and standards, if to create a more common baseline by which we can actually do our jobs day to day. When you think of the introductions of the panelists, I'm very fortunate to be able to share with you what I would describe as a top-down perspective, as well as a ground-up perspective. And while MIRA, like other professional bodies, likes to talk about best practice, as the panelists would agree, at the end of the day, best practice is very much ground up, meaning running businesses, meaning working out how to make businesses sustainable. We've all been through a global pandemic, so you all know what I'm talking about. And ultimately deciding, regardless of frameworks and other useful guidelines and so forth, not that I'm saying we don't need rules and regulations, but ultimately they run businesses, they know their businesses, they know what's material, they know what works. And in many ways, they should know their target audiences best as well. So we're going to have that ground up view as well as the top down view, excuse me. Last but not least, there was mention of Amar, a good friend of mine, who is responsible for investor relations business at Mubasha, who of course we heard from yesterday. And I think in this day and age, given what I just said about the global pandemic, there is no excuse not to be able to reach all those target audiences and use all that valuable data that you have anyway to run your businesses and increasingly share it with external stakeholders. So to begin, if I could ask Sheikh Khalifa to set the scene, given all the wonderful work that the exchanges have been doing. And we're very, very proud to partner up with Bahrain Bourse for our own annual conference, but also other initiatives in both IR and ESG. And in many ways, I think Bahrain Bourse represents, at least to mirror, a very, very good example of can do and how you can make a difference from a policy making and market operator point of view as far as IR and ESG. Sheikh Khalifa.
Well, first of all, thank you for having us in the panel today. You spoke about ground up, and this is exactly personally how I got involved in ESG back in 2017. We went on a road trip to one of the countries in Europe and met some of the asset managers. And just back then, the topic of ESG was, you could see it in the news. So my thought was it's just the flavor of the month. I didn't pay much attention to it. And as soon as we sat with the asset managers, we wanted to give them the presentation as a hard copy. And two of the asset managers who don't know each other just refused it and said, no, it's our policy is just to be as digital as possible. And I was surprised that to this level, they are dedicated to it. And I kept reading more and understanding more on ESG, which led me to believe that this is something essential and has to be embedded in the organization, whether it's the operations, management, and obviously board level. So we went back and started, I mean, we worked together on it. We, I think, issued in June 2020 ESG guidelines in that regard. But what relates to IR, we know now ESG is more important than ever. Especially with the COP28 will be very close to us in the region in UAE coming up this year. And we anticipated the discussion. I mean, COP27, the discussion within capital market has been also strong. So we, as a GCC council, we met with GCC exchanges and issued a unified ESG guidelines, compromises of 29 metrics that deals with the social, governance, and environmental factors. I think 10 environmental, 10 social, and 9 governance elements, and includes gender pay, gender diversity, obviously with the focus on the net zero economy. We included some metrics regarding that as well. And therefore, we continue to work with the related parties, such as yourself, to make sure that this is an incremental. I mean, you cannot push it or have a paradigm shift in capital market that would disrupt the market, but it has to be incremental. So right now it's on voluntary basis, but we hope by time some of the metrics should be mandatory to drive the ESG further.
Thank you very much, Sheikh Khalifa. And I don't think we can underestimate, particularly given we're here at AFCM, the importance of the market operator in setting the tone, setting the example. And I think use of guidelines has been very, very useful. One of the most common questions we get at MIRA as a professional body is around the frameworks, is around the standards. And I think efforts to converge, if I can use that word again, or to create a common baseline for reporting is clearly a wonderful start from an exchange point of view. Before I turn to the sharp end, if I can put it that way, for our investor relations teams here, representing a very good cross-section of not just banking and finance, which of course has a disproportionate or outsized effect on all of us, given that we all need banks, and therefore can set a very fine example, I think, to their banking customers as well as to their own other target audiences. Let me just bring in Amir, because we mentioned technology in many guises yesterday. Sheikh Khalifa just mentioned digital. And I think it's very important in a modern world when so much has changed to be able to use technology to full advantage. We touched on it yesterday, but Amar, I'd just like you to take a few minutes to explain what you do with responsibility for IR in your own organization. And we talk a lot about data, what we actually mean and how we use often very internally generated data to increasingly share that with external stakeholders who clearly have, in many ways, a need, if not a right, to have that information if they're to make wise investment decisions. Amr.
Thank you, John. First, I'd like to thank AFCM for having me today. As you mentioned in the beginning of the panel, there are no excuses now for not reaching out to target audience through technology. So originally, I'm working with IT and with multinational companies covering financial sector, and we're trying to digitalize the process and make things easier for all communications and operations. So this actually, when it comes to fintech and investor relations, this have a very particular and important role to digitalize the process and fill in the gaps that are missing. So there's a lot of to do in this industry and the investor relations communications, and we can still achieve more. So I just want to start with speaking about technology in general and just specifying the investor relations communication. So as you just said, there are no excuses, and we've seen recently a significant shift in the way businesses operate and communicate with their whether investors or stakeholders. Even internally and externally with employees and customers, this has been a very big change, especially after Corona. After COVID, everything has changed and how people interact and communicate. So the use of technology has become something fundamental and something crucial for businesses to stay competitive and to maximize their value as we go. In fact, according to a recent survey by a company called McKinsey & Company, which is management consultancy firm and leaders in innovation and strategy. So the survey showed that companies who embrace technology and digital transformation are seeing an average revenue growth of 8.4%. This is compared to an 0.3% for those who are slow to adapt these changes. So if we compare, the gap is really huge between both of them. Also, one of the significant advantages of technology is its ability to analyze and access data. So with the vast amounts of data available now, businesses can gain insights into investor behavior, market trends, and investment opportunities. That was not possible before. And this is in particular very important when it comes to integrating both IR and ESG as data-driven insights that can identify ESG risks and opportunities that could impact on long-term value creation. Also, a very important topic, which is attracting institutional investors. Technology is a very important role to play here. So as we know, 70% of the investment flows are coming from the retail investors. So what actually technology can do in this topic? So what actually institutional investors are looking for? They're looking for companies who are highly transparent. They are looking for companies who are proactive in their approach to ESG. So they are looking for companies who have strong track record of performance. And what technology can do can improve their ESG reportings, also benchmark again at their peers and demonstrate the impact of their sustainability initiatives, making them more attractive to these investors. So I just want to give a good example of how investor relations communications could be taken to the next level by the use of technology. So the example I'll illustrate is our platform called IR Pro Mubashir Digital Connect, which mainly what does it's just to brief you out. I don't want to go into details because it's not about this platform. It's about the idea of taking our communications to the next level and take it forward. So we're leveraging the latest technology trends like blockchain, AI, data analytics. So the reason why we thought about this idea is it's always been one main challenge across our markets as a whole, the lack of foreign investments, and in each market, and most of the investments are taking place locally. If we take, for example, Saudi Arabia, Tadawul, all investments, institutional investments are local inside the same market. So we're aiming to get investors outside of the markets through this platform. So we're adding mainly all big investors on one platform, so we have the right data, which is a very important point. Having the right data on one platform and underlining data, the right correct data, and also the big listings across the Arab markets. And we're putting a webcasting conference on this platform. So whenever there's an investor wants to meet a company, there's no need for a physical presence. You can still meet the company itself, and the whole thing is on a blockchain technology, so it's 100% secured. So we're securing all communications from the very early stages. The investor gets to collect all the information and data about the company till he actually meets the company, and even beyond this, if he wants to share confidential documents, for example, he can still share it securely with no worries, and all brokers will be listed on the same platform. So the main thing is just facilitating communications and take it forward to create more exposure. So there's always lack of exposure. So if for example, if a company or an investor is investing in real estate sector, just an example, and he's looking at all real estate investments across the Arab markets as a whole, so he will get to see all stocks from the emerging markets till the very mature markets. He gets to see everything and compare notes and compare them, so he can bring more opportunities. This will help the market itself. This is something that would benchmark the IR and also help and take the IR communications to the next level. Just to conclude, all right, there are two main things for businesses to stay competitive and to maximize their value, which is two main things, which is the use of data and make sure that we're using the right data so that we can save time and effort. And the second thing, which is very crucial and very important, which is how to use technology. There's a lot of technologies recently out there. People don't know how to use it, actually, because every day we're seeing new technologies, trends, new things, ChatGPT, many things, and we still don't know how to use this technology to be used in such industry. So by leveraging and using this technology in the right form, this can be taken the communications forward and save a lot of time and effort. And later on, for the companies who will not embrace technology and digital transformation, they will risk being left behind. And this is something all businesses have to cope with so that we can still moving forward. Thank you.
Thank you, Amma, for that comprehensive overview. I'm not a technology person myself, so to hear your explanation is very helpful, particularly from an IR point of view. And in many ways, you've emphasized what we hear regularly at Mira, which is this competition for attention, or this competition for capital, which you can only really succeed in terms of public capital markets if you're completely on top of your game. And I'm very fortunate, as I mentioned earlier, to be joined by some top-notch IR practitioners. And I'm going to start with Lamia, just to help explain to us how in an organization you can begin to think ESG, you can begin to integrate ESG thinking into the investment case and ultimately into a successful IR story. Lamia.
Thank you, John, and good morning, everyone. I don't think it's a news to anyone in this room, and as the two gentlemen have said, that investors now are integrating ESG into their valuation, into their modeling, into their investment process. And this is something, a trend that I'm not only seeing with international investors and the global funds. This trend is also coming from retail investors. In fact, there was some statistics by CFA Institute saying that 93% of retail investors in the UAE are looking to invest into sustainable securities. What does it mean? It means that our job as IR is different now. Yes, we still have to report on financial metrics, on the financial story of the organizations, but also ESG and reporting on ESG metrics is very important. And what I do find it challenging is to understand what are the key metrics that these investors want to focus on. From our talks to investors, and I'm sure the securities have a similar experience, investors, they don't want a perfect company. They don't want a company that is doing really well in only an environment. They want to see a trend. They want to see that ESG is integrated within across the board. And they want to see that ESG is now part of your business model. And that's why, for example, we at ADIB, we've announced our 5-year strategy, and we've met with different stakeholders. And yes, we have different business strategic initiatives, but we have put a pillar called Sustainable Future, which is an ESG pillar, where now each and every business have a different ESG KPIs. And this goes from climate change, environment, to inclusions, to financial inclusions, to diversity, to gender gap. And these are different trends. It doesn't have to be only climate change. I know people think that ESG is only environment and climate change, and this might put a lot of challenges to company, and they think it's a big investment and maybe it will impact the profits, but they have to look at the governance impact of it as well, and the social impact of it as well. So for you to have a credible story with investors, reporting is so important, and disclosure. And as Amr said, data is very important, to mine this data and to do it exactly like we do the financial reporting. In financial reporting, you don't report a good number and hide the bad number, and you don't spin his story. Investors want you to do the same with ESG. They want you to report on every single number, even if you're not really happy with this figures or this number, that's fine. The fact that you are mitigating this risk, the fact that you are reporting on ESG, this is what they care about. And that's where the trends are going. Thank you.
That's another super overview. And actually the point you make about accounting standards, which of course have taken many, many decades to converge so that we basically understand accounting around the world. There's no reason why, as I think you're suggesting, Lamia, that on the sustainability reporting, that will be exactly the same, albeit it will take time, just as it did with accounting. And maybe in an ideal world, accounting and sustainability reporting will be one and the same thing, if not integrated reporting. Exactly. So we're getting a lot of help, but it will take time. Just like to turn our attention to CIB, because Yasmin is an IR award winning IRO and has been for many, many years, and supported for many years by Sharif there. And I think CIB is a very good example, among others, of integrating practices within an organization. And I'm always very, very pleased when I see, as I heard from Adib as well, that an organization is beginning to think across key functional areas. So thinking about best practice, Yasmin, I'm going to begin with you and help us understand what that actually means, and if possible, how that's actually reflected in key performance indicators within your organization. Thank you.
I'll just follow on what my colleague Lamia said. I mean, it's very important for investors to just feel that ESG is really integrated and to just know how ESG is managed, integrated and governed across the institution. So, I mean, at CIB, it's a top-down, bottom-up approach. It starts with the oversight of the board. We have a sustainability advisory board, and then we have the executive accountability with the sustainability steering committee that is chaired by the CEO and MD. We have a dedicated sustainability department that started back in 2013 and has been growing ever since. And then we have the support metrics across the institution. We have sustainability advisors and sustainability ambassadors within each department across the institution that feed into the sustainability department. So I mean, what's really important is the true integration of ESG in the very fabric of the institution, starting with the policies, the culture, the operations, and everything. And like Lamia said, reporting. Reporting is key. With CIB, the starting point was our sustainability reporting. We used it as a benchmark and a gap analysis tool to know where we stand in terms of each KPI and the different KPIs that exist, which could be overwhelming. But we started with that. And from then on, we put our strategy and backed it up with the right governance structure, which is key. Another thing that I want to add is having an open dialogue with all relevant stakeholders is key to just reach the maximum output whichever institution can reach, and to have the buy-in of all stakeholders. And just to add to what my colleague Amr said, having the data and the performance that back this data will give you the right foundation to be able to build the proper story and communicate it properly using technology and whichever means you have to the investment community at large to be able to meet their ESG requirements and requirements in general.
Super. Thank you very much. And I mean, essentially what you're demonstrating, at least to me, is the ability to differentiate the investment case, the ability to use internally generated data, which of course you need to run the business, and increasingly sharing that with external stakeholders who essentially you have an ongoing dialogue with. But again, having worked in big organizations, including banks like your good selves, I know that I always used to pride myself on doing what I thought was right in IR, while sometimes forgetting, well, hang on, what happens if there is a chief communications officer or a chief sustainability officer, let alone a chief financial officer and the rest of the C-suite. So Sharif, I'd just like you to share, given your many years experience of actually implementing this across key functions and making it work, if not in a seamless way.
Good morning, everyone. First, before we begin, I'd like to thank AFCM for hosting us here today, and it's a privilege to be amongst such a distinguished panelist. So to begin with, for me and for what I have seen over the course of the various years I've worked within the financial sector space, is I want to echo exactly what my colleagues here are saying. It is a top-down approach. It is essentially not just building a story and the narrative, but explaining that narrative and getting the buy-in of the entire organization of that narrative, and intricately putting it within the fabric of the organization through the policies, and talking to people within the organization across the board, so that we're all speaking essentially the same language. At the end of the day, being in service industries such as banks, colleagues in banks are always exposed to clients, to investors, to various other avenues where they are essentially echoing the institution and what the institution stands for. These are the people that are essentially front-facing, and they are the best advocates of your story and your narrative if they are aware of it and if they are familiar with it. One of the things that I found to be key is definitely data is very important, but more importantly, understanding that ESG in general is something that is relatively new. It is an industry that is still relatively in its infancy, and being nimble and flexible is very, very, very important. You will never be perfect in every aspect of the requirements or the best practices. However, being flexible, like Lamia was saying, in that people understand you're not necessarily going to be there immediately, but you need to show the will of the organization of being flexible. And one of the benefits of the fact that it is an industry and a topic that is still new is you can essentially always adapt and amend and say, well, I cannot meet fully this requirement today, but let's find a middle ground. One of the disclosures that are common in perhaps other developed markets is specific aspects of remuneration, for example, which in our region and in our side of the world, we might not necessarily be in a position of willingness or ability to disclose certain levels of information. Speaking to regulators, you will find a significant willingness, and this is one of the things that I found initially very, very refreshing and comforting, is that regulators, especially in exchanges and regulators that deal with the public, they have a tendency to be actually very accommodating and understanding of the circumstances that you operate in. The guidelines are there specifically as guidelines, definitely, but they will work within the framework of the industry and the cases that you are operating in. Some industries cannot meet certain requirements. Speaking to the regulator and having that two-way dialogue with regulators, you will find willingness to find a compromise, find a middle ground. Okay, you might not be able to go out and give specific disclosure on a specific line, but we can take that entire segment, for example, and give an overview or a high-level number that would give an indication. There are several agencies out there that will help you in optimizing the level of disclosure. Having the data is great, it is wonderful, but having the ability to use the data to best serve the end goal of the organization is very, very important. And there are plenty of entities that will give you ideas on how to optimize your data set to not give information that is perhaps you're not supposed to give, or information that is not necessarily serving the purpose that you want to deliver. And having that flexibility, having that willingness to go out and speak to the various stakeholders about what is happening, how things are evolving, like Mr. Amara rightfully said, technology is something that is infinitely evolving and changing and updating, and we cannot always stay on top of it all. but we can be flexible in understanding where the new trends are coming in and try to optimize our use of it to best serve the organization's end goal. Thank you.
Well, that's a great case study as far as I'm concerned. So thanks very much for sharing that and the way clearly that you work together. And I suppose in a perfect world, while, as you quite rightly suggest, it takes time, we talked about data collection, we talked about analysis, and then we talked about ultimately presenting that to an external set of stakeholders. I suppose the end goal would ultimately be, if the information you have is going to affect the decision-making of the investors who might be wishing to invest in you, then ultimately we would hope over time that that's actually reflected in your reporting. So we've heard from the ground up. To me, it sounded wonderful, albeit it takes time. And I know from my own practice, it's actually very difficult to do seamlessly what you good people seem to do. So I'm just going to turn to Sheikh Khalifa to ask, over and above what the issuers are doing, from an exchange or a market-led point of view, what other benefits should accrue from sustainability reporting?
That's a wonderful question. I think once we discussed the ESG guidelines back then, we decided that it would be voluntary because of the values that are non-financial. Once the companies starts to realize the benefits of adapting these metrics into their organization, they will notice improvement or efficiency in operation, especially environmental. I mean, I could give an example. At Bahrain Bourse, we lowered the energy needs, and that affected the cost of energy for us. As simple as that. I mean, that's just a very simple. I mean, there are many other examples. Socially, having an inclusive or a team that are working together makes it even, the productivity will increase. Having proper governance will lower your risk across the board, whether it's financial, operational, legal. And therefore, I do believe, even on voluntary level, we noticed many of the companies listed in our exchange had adapted many of the practices. And as my colleague mentioned, the disclosure on top level, whether it's remuneration of executive management or board, it's being adapted by most of the companies now in Bahrain. We going to keep push forward, especially on the environmental front, to align with the government objective. But it doesn't mean that we will stop there. We believe that there is a value above the financial value, and it will, I mean, it will show.
Thank you, Sheikh Khalifa. So there's the tone from the top, loud and clear. But I think we all accept also dynamic capital markets, meaning we're forever having to evolve. I know we've got a few minutes left, so I just want to give the audience an opportunity to put to the panel any questions that you might have on your mind. And if not, I will ask the panelists just to think in terms of maximizing value and setting priorities, to leave you with one key takeaway that hopefully you can implement immediately. Any questions from the audience in the last couple of minutes? So you're all still, oh, the gentleman at the front table there. We could have a mic, literally center of us here. Mic coming up.
Good morning. Thank you very much. Well, actually, I was asked yesterday what are the main challenges that are facing the stock exchanges and implementing the ESG and the climate change reporting. So I'm going to ask the same question to any of the panelists. What are the main challenges that are facing stock exchanges or any of the stakeholders in implementing ESG or climate change reporting in particular?
So a leading question from a CEO from the Oman Stock Exchange, perhaps to another CEO, or is that unfair?
I'll take this.
Nicely put.
What we find the biggest challenge is the standardization of certain metrics. What do we need to report on? Because on ESG, you have different stakeholders. So you have the investors who are looking at certain metrics, and it differs from an investor to another as well. And you have your customers who want to hear from you on different things, and you have your employees, and you have your regulators. So the biggest challenge is for us as a storyteller, let me put it this way, is to have a proper ESG roadmap that will answer all of these stakeholders. And what do I ask regulators and exchanges is to standardize this. Because we don't know, we report on GRIs. I know that Egypt, they follow TCFDs. I know that other countries probably other standards, and we would like to have one standard and a standard for our region, because our region is different. And the way we see ESG is different than the West. And we would need to have our own standards and to make it mandatory, not only for listed companies, because we do report on our clients as well. And our clients, as Sharif said, they don't share their data, which will put us in a challenging situation. So it should not only be for listed company, it should be mandatory for the entire industry.
Thank you, Lamia. I'm conscious of time and I don't want to hold the conference up unless there's another burning question, which of course there is, right here on my right-hand side at the front.
And thank you very much for this interesting discussion. Just have one question for Sheikh Khalifa. I just want to understand how you see the regulatory and the government rules for, and what kind of initiative we would like to see actually to grow this industry, specifically with all the growing importance of the ESG and sustainability worldwide, and especially on the region here. So what kind of initiative you see that the government and the regulator should put in place to encourage the issuers and to encourage the investor to go into this industry?
Thank you for your question. It's a very hard question to answer. From the beginning, we looked at the scoring of ESG, and personally, I didn't believe in it. I mean, the scoring is still an infant stage. You cannot score a company based on qualitative data and just change it to quantitative. Suddenly, it doesn't make sense for us. So we tackled it from beginning, and issuing the ESG guidelines or unified ESG guidelines, as my colleague mentioned, that is catered to our region, was the first step. And then the second step, we actually launched the carbon index in Bahrain, I think in 2020. Now the GCC Council is in the process. I'm not sure if I'm allowed to say this. I think here we go. In the process of launching another ESG related indices in the region, and that should drive competition of companies to meet those standard for this those indices, and will have rating based on that. And I think, as I mentioned earlier, it has to be incremental. Those so many elements of ESG cannot be enforced and expect a paradigm shift in corporate cultures, and so we work with them and we listen to feedbacks as well. So this is a two-way communication. As the regulators now, our role is not just to hold the stick, but the carrot as well.
Absolutely. I'm going to ask Amir to give you his key takeaway.
Okay. One thing which is very important, which is, as I said earlier, there's big gaps in the IR communications that needs to be filled. And companies needs to understand more, and that we shouldn't be aiming for businesses just to stay compliant with the regulators and exchanges. They're supposed to be highly transparent with the public so that it will affect trading performance. So this is something very important, and we have to be, as whether emerging markets or mature markets, we need to take the IR communications forward by the use of whether data, as my colleagues mentioned, or technology, the right use of both of them. Thank you.
Thank you. And on behalf of CIB, excuse the one response. Yasmin, if you don't mind.
Again, I want to reiterate on the importance of open dialogue and open communication between all stakeholders, beginning with the regulators, the companies themselves, the company, or within the company itself. Transparency. We have to be transparent about everything in terms of reporting, in terms of you have to report the bad before the good. And we need a paradigm shift, like an integral change in mindsets, to be able to gather the proper data and eventually report it and what have you. So I think for me, open dialogue, buy-in of all stakeholders, data, and back it with the performance, and then report it.
Nicely said. And Lamia, you gave such a good answer to the last question. I'm just wondering if you'd wish to make a final comment.
So we always say the worst story is an untold story. I call all the executives here to disclose, because if you don't do it on ESG, the investors are going to the rating agencies to find what's your story. And rating agencies, they don't really engage with you. They are AI driven. So what's ever in the public domain, they take it and they do your scoring. So we should own the narratives because this will impact the performance of the equity or the fixed income or any securities. On the narratives, that's what I say, and disclose.
Ouch. And Sheikh Khalifa, can you top that?
I mean, I saw some people sleeping during the panel. I hope we had a good nap. But nothing to top that. I think this is important, and my only issue is with the scoring. That's why we want to change the narrative from the region to the rest of the world.
Super. If I could leave you with a quote: sustainability reporting should be the antidote to greenwashing, given that came up yesterday. And on behalf of your panel of speakers, thank you again for joining us, and clearly a big thanks to AFCM for organizing such a wonderful event with the host MSX. Thank you.